But on that note, let me also welcome Sunil Subramanian, our market expert on board, and we as always have Nuresh joining us with Kunal as well on the show. Mr. Subramanian, thanks so much and good afternoon and thanks for joining us on the show. First of all, the season's greetings to you and wishing you a very happy new year in case we don't interact with you once again before the end of the year. Just want to draw your attention to a couple of these names in the auto space. Auto seems to be a sector that is doing pretty well, at least in today's trading session. On a year-to-date basis, however, auto has not done all that well, but not too bad either. What's your outlook coming in on the select auto names that are doing pretty well in today's trade?
See, I would say that if you look at the composition of the auto industry, right, I think that the high-end vehicles, right, are the ones which are doing well, the SUVs. The K-shaped economic recovery is reflected very well in the auto space. And I think that those who are leaders in the SUV segment, right, who are coming with new launches, those are adding a good EV touch to their vehicles with hybrids and EVs. Those are the ones which have a good future and I think are that pricing in of the future good prospects. I expect this K-shaped recovery to sustain. I think the broad-based auto sector, for example, like two-wheelers and entry-level cars, would still continue to face challenges, but we are yet to see the impact of the monsoon translate into a good demand for that level, right? The second is that auto, again, apart from the names looking at today, the auto is not a single segment. Auto has a capital goods segment through the commercial vehicle piece. It has an export segment through the auto components piece. It has a mass retail, I would say, through the two-wheeler place and in the high end. So, and then you have an agricultural monsoon-related tractor. So, auto as a whole is a very mixed pack. And I think that the high end will continue to, through the new year, do well. So, I would say that that's what I think is doing well today. And I expect that momentum to continue for the next year also.
Okay, so that was about the auto space. But Nuresh, comment on the underperformance of the banks, ICICI, Axis, HDFC, everything tumbling away.
So we've been in a range-bound move for all the indices. So in the last 3 weeks, what we've noticed is one day of volatility where we see a 500, 600 pointer range on the Nifty. And the next 4 or 5 sessions, we continue to be in that band. So for now, that band is very similar, 23,500 to 24,000 on the Nifty. Same goes on the Bank Nifty. ICICI Bank, which was closer to an all-time high, has come back to that 1280, 1300 mark. But 1240, 1250 remains a support. Same is the case with if you pick up a HDFC Bank, which is still above the 1750, 1800 band, just struggling around that area. Axis has been an odd one in terms of the stock has broken down below that 1140 to 1130 mark, which was a support, which was being held on for the last almost 6 to 8 months. And next support is around 1030, 1050. So at current levels, we wait for a reversal signal in Axis Bank or a breakout signal in ICICI HDFC. But for now, they're just stuck in a band.
Okay, that's the view coming in on some of these private banks. But Mr. Subramaniam, coming to you, give us a sense of what you are making about all of this banking and financial action heading into 2025. Do you believe NBFCs, after the year of pressure that they've seen, could be in for some recovery and that is something that could be shining bright in the financial space? Or you believe either PSUs or private banks could be leading that rally?
The combination of private banks and NBFCs would lead the rally. Because one, as you mentioned, they have underperformed the overall market and the Nifty also. So I think the numbers, the earnings numbers are fairly decent. And I think that if you look at it from a value pick, is probably the top value pick is the private sector bank in the market, followed by the NBFCs. The reason I say that, I was alluding to my previous answer to the auto pack, is that I think the story of India is one of the high-end consumer, right? Whether it's auto, or it's in consumer durables or consumer discretionary. So that requires retail financing. And I think that financing is where private sector and the NBFCs are at the forefront. And NBFCs also, you have gold loan NBFCs, you have microfinance, you have a whole range of things catering to this. So I think that the pressure on the margins for these people will ease over the coming year. And I would consider that top quality private banks and NBFCs would be among the better bets to place on for year 2025.
Point taken. Kunal, but comment on the charts of a couple of these very active names. Godfrey Phillips, again, in the last few minutes, it shot up materially. And then Intellect Design has been on its own trajectory. I mean, it keeps on having one, up day and one down day, but nonetheless, today up 13%.
Yeah, I think Intellect is something which is looking very attractive. The stock is now seeing second positive day over the last 3 days, and excellent volumes in the last 3 days. So even I think yesterday, rather on Tuesday, when the stock was retracing a bit, I was going through negative price correction. The volumes were pretty much on the higher side. Today, when the stock managed to break past about the 2 days swing high, which was I think around the 975, 980 mark. Post that, we've actually seen the stock and the volumes improving significantly for Intellect Design. So which means that the cumulative chunk of the last 2-3 days of volumes indicate that this could be a very strong trending move for Intellect Design. It's also bounced back from its longer term averages, just about that 800, 850 levels. So that's also another positive factor for Intellect. I would believe that the stock after this leg of up move, even if it goes into a phase of consolidation, should be good for another 100 to 150 points on the upside, but that could probably happen in a more positional manner. So I would believe 1150, 1170 could be a decent target for Intellect. Godfrey Phillips could be something as a wait and watch, because this is the first time we're seeing the stock bounce back in the last 2 months of this price correction. The high the stock had made in the month of September was around the 8,500 levels. Post that, we've actually seen the stock correcting to 5,000 mark. That was the low Godfrey Phillips had hit last week or so. And from there we're seeing a bounce back. So this could be more of a relief rally going into the expiry for the stock. If there is a follow through price action on a similar kind of a volume note, then I would believe that there could be a signal of a major trend reversal for Godfrey. But as of now, I would probably just keep it under the radar rather than initiating any trade.
Okay, so wait and watch call coming in for Godfrey Phillips. Naresh, coming to you, on a year-to-date basis, a couple of these stocks have been very beaten down. The likes of Vodafone, IndusInd Bank, RBL Bank, with cuts of anywhere between 40 and 50%. Are you spotting any kind of reversal or recovery on the charts for these three names, Vodafone, IndusInd and RBL, going ahead?
So out of these names, RBL Bank is one which is showing some bit of reversal signals. For the last 2 months, we've seen a bottom around 151 and then another time 148. And very recently, 2 days back, we made a bottom around 150. So there have been 3 bottoms around the 150 mark, trying to make a recovery. And 180 is the interim high. So for now, it's a 150 to 180 band. So would expect a recovery towards 180. And if that crosses, then we get into a longer term trend change. IndusInd, on the other hand, has seen many false starts, tried to make a recovery, take a pause around 1050, did not, and now the trend still continues to be low. Once it sustains back above 1000, it could be on radar for a recovery. So for now, out of these 3 names, RBL Bank is the most interesting one.
RBL Bank is the most interesting, 2375, 750 rather on the Nifty. We'll take a quick break and we'll be right back for the last 45 minutes of the trading session.
Hi there, welcome back to Closing Trade. Thanks so much for staying tuned to ET Now. Let's take a quick look at what the markets are up to, if there's been any sort of recovery when it comes to the Nifty, and none at all. Continues to be below that 23,750 level. Very flat, nonetheless trading with a slight positive bias given the expiry moves that we are seeing today. But Kunal, coming to you, give us a sense of what the broader markets are looking like, at least on a technical perspective heading into next year. We've seen a roughly 20-25% return on a year-to-date basis. Do you believe that this double-digit return in the higher 20s could be possible into next year as well, given that we have a lot of events that are also lined up early next year?
See, I strongly believe that potentially the markets in the next coming year, calendar year, could be more of two-paced. For example, we were discussing this in the morning that over the last 6 months we've seen many sectors being at the brunt of some sharp selling. Now, it started off with PSU stocks, then defense names, PSU banking names. You had a point where many of the private sector banking stocks had fallen very sharply. So I think except for the 2 stocks, the 2 prominent names on the private sector banking stocks, we've seen most of the stocks going through a correction. Then came a phase where the FMCG indices, the auto index, these sectors have also managed to see a sharp correction for themselves. We've already seen media index being at a multi-week, multi-month low quite substantially over the last many months. So which means that over the last 6 odd months, the sector health had deteriorated significantly. Now, generally we see this pattern lasting for a period of 6 months to 9 months on an average, which means that maybe a good part of the chunk of the underperformance from the sectors is now done. There could be a possibility that there may be a trickling down effect into these stocks and sectors for the first 2-3 months of the calendar year 2025. But I think post that, I would actually expect a very strong recovery coming back into many of these underperforming stocks and sectors. So I broadly believe that the second half of this year specifically, I think could be very substantially positive for many of the sectors, and especially the ones which have been huge underperformers for the last 6 months to 9 months broadly.
Okay, point taken. So that's the view coming in on some of the stocks and sectors, and of course how the broader markets are really turning out to be. Naresh, one pocket which is outperforming today's Adani group of stocks. I mean, take a look at ports. That's up almost 5%. Green, energy, transmission, power. Pick up any of the name. It's in the green right now. What within the pack would you still recommend a buy?
So out of that, Adani port still looks interesting for the fact the stock is still lower than where it was around the cap down day. So out here, the trend has been strong in the port sector as such. The stock, if it sustains 1250, would be a reversal and could go up to 1400 as well. Would keep a stop loss below 1200 on this.
Naresh, thanks for that view coming in. Mr. Subramaniam, I want to get your outlook on what the consumption space could shape up like heading into next year, particularly now that we've seen this frenzy coming across the quick commerce space. By next year, by end of next year, we're expecting to see another player get listed in this space and give competition to the two stocks that are already listed. Do you believe that this kind of frenzy that we've seen in 2024 across and around this entire quick commerce space will continue to build up into next year as well? And on the back of that, what are you making of the impact on your traditional big box retails or the mom and pop stores?
I think that overall, sorry, that was for me?
Yes, sir, please.
So overall, I think, this quick commerce, the kind of rapid development that's happened will sustain for the first half of next year, but by second half, it should all cool down. And one of the main reasons for that is the changing demographic of the country, right? The number of young people going up, also the rising per capita income. So today, if you see that this year we are probably at about 2,800, next year could be a big year. 2025, I would say we will hit the $3,000 per capita income mark during the course of 2025. But this kind of a growth in per capita income has come at a very, very sharp diverge between the lower poor people, the lower middle class, and the upper middle class and the rich. I think that gap is widening. Yes, the poor and the lower middle class lives are improving, but the ones at the higher end are improving much faster. So when you have youth plus rising per capita income at this level, then you have a strong thing for where time is of the essence, quick commerce, high-end value goods, quick decision making. And bear in mind that this income is not just going to get spent, it's also going to get saved. So I think the right story for next year to me is the rising per capita income and the continuing disparity. And hence, consumption for me is in the first half is a consumer discretionary play, where I include consumer durables, I include auto, I include realty and housing, right? But the second half, and I expect the budget this time to be more populist than in previous years, with two big elections up ahead in the coming years in UP and Bihar. I think the government has learned the lessons from Haryana and Maharashtra. So you'll see a lot more money now being gone through what I call as developmental populism. They'll direct it in a developmental manner, but towards the bottom end. So the second half of the year could be the year of consumer staples, and I see that will recover next year. So it's overall, I would say consumption is a good pick with the initial tilt towards discretionary consumption, and quick commerce, high-end retail, all of these feature within that.
Development, is the stuff that really needs to watch out for in terms of the populism, whether the spend actually is something which is going to have a multiplier effect or not, because yes, the broad portion of the economy or the mass segment is a bit underperforming right now. But what's also underperforming is Page Industries, a cut of almost 4%. Bandhan Bank is down and out. Hindustan Copper is in the red right now, and even some of the metal names like NMDC, Steel, etc. are under pressure as we speak. For the month gone by, if I have to look at the best performing sector so far, or even the stock for that matter, it clearly is real estate by a margin. Oberoi Realty, Lodha, Raymond Prestige, these are your outliers. Even Godrej Properties, even though DLF, Sobha, Brigade, they have underperformed. Naresh, is it very diverse in terms of the stock specific action within real estate, or is it going to be a case that everything will rally?
So it's getting divergent for the last many months. So if you look at Oberoi Realty, that's been a leader. The stock has, say, over the last 1 month done well, over the last 3 months, as well as over the last 1 year. And at the same time, you have something like DLF, which is sideways for the last almost 8 to 10 months. You could pick up a Prestige, you could pick up a Brigade, and you would see similar price action where they've been sideways for the last 6 to 8 months. So selective moves are happening only in few names, not across the board. So we are not in a time where every real estate company goes up, which was happening back in 2023-24. So for now, it would be more selective and would wait out. It could be some more months of consolidation before a breakout move or a breakdown.
That you're coming in on Nifty Realty, but on that note, Mr. Subramaniam, thanks so much for joining us on the show and speaking to us and joining us once again this afternoon. But let's shift focus and talk about the entire